I want to start back from this whole issue of the sole trader and sole trader partnership wages and salaries. Wages and salaries, as far as sole traders are concerned, as a sole trader, you're not getting wages and salaries. If you're a sole trader or partner in a partnership, any amount of money paid to you, to yourself, it's not a deduction for tax purposes. You as a sole trader cannot go under the PAYE system. You cannot go under the PAYE system, and you cannot pay yourself national insurance as a sole trader. If you are a sole trader and you're working, let's say, before in an employed position and you're paying national insurance, the national insurance upon your application would allow you to continue to pay national insurance, albeit for 1 year, to see if you can catch up with whatever outstanding contributions you may want to put in. But as far as that is concerned, on a normal basis, you're not required, you can't pay national insurance, and you cannot take out a salary for yourself out of a sole trader or partnership. Whether it be a regular salary or interest on money advanced to the business, those are not deductions in a partnership or sole trader business. If you're a sole trader in a partnership or a business, that sole trader or partnership, the money that you take out of the business that you do that is called drawings. So what you tend to do, you're saying to yourself, what can I live on in this sole trader business? Oh, I'll pay myself $3,000 a month. Then that $3,000 a month is not salary. You don't pay national insurance on it. You don't pay health. You don't pay PAYE on that. It comes straight into what we call drawings. And as a sole trader and as a partnership participant, you will deal with that on the basis of your drawings. Everything else is profit, and it's on your profit to which you are taxable. Let's look at directors now, and directors' wages and salaries. Now, directors only exist when you have companies, all right? Or you're directors of, let's say, a non-profit organization or stuff. But I'm saying from a point of view of a sole trader partnership as against a company, directors are in companies, and directors, salaries paid to directors are deduction for tax purposes. And so that directors may not necessarily be a shareholder, or director may not be a beneficial owner. A director may not be a shareholder and may not be a beneficial owner, and therefore they get their payments via salaries. I could be a director and a shareholder and a beneficial owner, and I want money out of the business. It is better I take it out as a salary. If you pull out money out of the business, not a salary, not as a director's fees, you will be liable for taxes on that money. However, several restrictions will apply in terms of remuneration for company directors. Where a company director provides some kind of benefit or purpose in terms of benefits in kind, like you give him a motor vehicle or you give him a house or things of that nature, then it's called a benefit in kind, and he has to meet payments for that benefit in kind. So I'm a director or senior management employee. I am getting a salary, and that's a salary deduction. That's a salary for tax purposes. And then at the same time, I'm getting other benefits, house and car. That's a benefit in kind. Directors are subject to income tax under the PAYE system. So when I look at a sole trader and a partnership individual, they have nothing to do with PAYE. They're not there at all. They are drawings and they pay on income tax basis. But once I come into a company, a limited liability company, where the ownership is separated apart from the management, then the issue here is that directors are subject to income tax and must come under the PAYE system. With regard to this thing called benefits in kind, which we introduced a while ago, if a company incurs an expense in the provision of an item for private use by a director or a special employee like a manager, managing director, the monthly taxable perquisite should be calculated as follows. You have motor vehicles. Now, I wouldn't want to get into this with you because it may not affect you, but there's a way in which these things are calculated, and therefore it's here in the slide, so that what you're seeing is that just about everything you do has a tax implication, and what you ought to do is to be aware of what that implication is for the things that you're doing. You need to be clear that as a sole trader, you have no PAYE issue unless you're employing people in your sole trader business. You have your partnership and you employ people in the partnership to do work, no problem. You can have a PAYE system. But if your sole tradership business is just you, or your partnership business is just the partner, then there's no salary position that you need to encounter. All right. For personal benefits and stuff, for these personal benefits, you still need to do the calculations in respect of the personal use component of the assets that you're using for beneficial purposes. Let's do a little bit about the withholding tax. Now, withholding tax may not affect you all, but again, it's something that you need to know because it's part of the whole tax regime. A non-resident, somebody who's not living in country, a person who is employed by a company that is operating in Trinidad for a period of less than 183 days in any year, is subject to withholding tax. Non-residents are subject to tax on their total income unless they qualify under some specific legal exemption. So some employers, people working in what you call it, in embassies and stuff like that, may get some tax exemptions. Non-residents are not entitled to tax deductions. So let's be mindful about, if I'm not a resident, there's no tax deduction benefits that you will have. So the tax deductible at source, and it's imposed on non-resident individuals and companies in respect of dividends and stuff like that, and payments arising from trade or business. I didn't put a slide with regard to this, but as I'm talking about it now in terms of withholding tax, we need to be mindful that those payments of withholding tax are also subject to board minimum revenue within 30 days of the deduction. We need to be mindful that under current arrangements, some people engage Venezuelans who are in Trinidad, and they are not subject to national insurance, and you need to be mindful of that also. But you have other things that you need to deal with them when you're paying them their monies. With regard to, here's a question. So we didn't have no pay or pay as you earn for the owner is a sole trader. Now, let me clarify that. If I am a sole trader, I have a sole trader business, I don't have a PAYE issue unless in my sole trader business, I am employing people who work for me. So I have a sole trader business and I have a doubles card, and I have 5 cards in Trinidad and running a sole tradership. The people who are managing the cards for me will be under my PAYE system. But myself as the owner of the sole trader business, I have no PAYE exposure as the owner of the business. The only way I have the exposure of the owner of the business is if I employ persons who work for me. I want to do something in a practical sense for you for a minute to make the point to many of you that as a sole trader, your issue is not how much taxes you're supposed to pay. Your issue is not whether or not you calculate and see how much money you're paying and I'm paying too much taxes to the government. There are different ways in which you calculate and pay taxes, and you can reduce your taxes by doing certain things. And here's how we do it. For those of you who are sole traders, or for those of you who are self-employed as sole traders or as individuals, let's do some calculations. The income tax deduction under a PAYE system, right? If we have a PAYE system and your weekly wage paid to you is $1,500 a week, so $1,900 a week, let's change that 15 to 19. And the annual emoluments therefore will be 19 by 52, which equals to $98,800. The total deduction on your TD1 form is 0. Well, not 0, personal allowance. Every other thing we say does not exist. You have no annuities, you have no pension, and you omitted the national insurance. Or the national insurance for here is small or insignificant. The only allowance you have is your personal allowance. Then the chargeable income is the 98,800 minus the 72. Put your chargeable income at 26,800. And all you do, you multiply the 26,800 by 25, and that is your total tax liability for the year in question of 6,700. If you want to know what is your weekly tax deduction, then simply divide that by 52, and it is $120.85. That's what you need to take out from somebody on a weekly basis. So the question with regard to you as a sole trader, you are not subject to PAYE if you do not employ people, but once you employ people, you're subject to PAYE. So that you can, and let me just say this, as a sole trader, you need to live, and therefore you need to withdraw money from the business. You can go ahead and withdraw the money from the business, but you're paying taxes based on the profit. So when I look at the calculation here for an individual under PAYE, you're seeing that, look, if you get $98,000 a year, your allowance is $2,072, multiply that by 25%, you pay $6,007 in taxes. But you know something, as a sole trader, you are also in a place where you can add your pension. And for many of you as sole traders, my advice to you is please don't go and take an insurance pension, but go and get perhaps a bank tax incentive savings plan or future cash or tax advantage at FCB, and put in place a pension plan, because a pension plan allows you have deductions that you can allow. I look again back at the PAYE system for somebody who is an employed person at $98,800, their personal allowance is still $72, but their national insurance and annuity can be deducted up to a maximum of $50,000. So if I have that deduction that I can make, your objective should be to maximize what I can deduct. And therefore you put money into an annuity of some pension position, and the pension plus your national insurance is a deduction against your personal your income. So therefore, in case before you on this presentation, your personal allowance is 72, the annuity max that we have, let's say here, is an estimate of 10,400. So therefore your tax, your total income therefore after the allowances is 82,400, and the chargeable income is now 16,400. The tax on that is 4,100, and the weekly tax on that is $78.85. The reason why the tax is being reduced is because of your personal allowance contribution. So for many of you as sole traders, because you do not have access to national insurance, my advice to you would be, please open a tax incentive savings plan, a future cash position, or tax advantage at FCB. Yes, you can have an insurance annuity, but the reason why I personally do not recommend it is because an insurance annuity is where you have what I call a consistent monthly deduction payment that must be made. And if I'm in business, I don't necessarily want to have overhead expenditure that I must always meet. And therefore I can meet it when I have the money, and when I don't have the money, I don't wish to meet it. So that's why I do not wish I wouldn't want to recommend an insurance annuity as opposed to a bank annuity that I can put in the money as I want, put more or put less, and they don't make any problems. The question here is, yes, that monthly insurance annuity was killing me. Yes, it does. And therefore, you need to understand as a business person, your issue is cash. You want to manage your cash flow, because without cash flow, you're into problems. So you got to look at your expenditure and do things to make sure you don't have significant overheads that every month you're trying to meet these overheads. I believe contributions to pensions annuity is $72,000. No, it is not. It is not. It is $50,000, ma'am. So, yes, yes, sir. Because it is $50,000. The $72,000 I'm talking about there is your personal allowance. Your personal allowance is 72. Your pension and national insurance annuity allowable deduction is maxed out at $50,000. Okay. Just remember that your national insurance contribution, only 70% of your national insurance contribution is taken into account. I trust we are good with that. So my advice again, to minimize your tax exposure, please go and get a pension position. It is beneficial to you because in the long run, you'll find yourself in a place where you're at least getting something back from it in future years, and that's important to have. Let's get into this other thing now that we call the VAT. And in the context of this VAT, we really don't mean vodka and tonic. It is value added tax. and we have to be mindful of what it is. Now, for many of you at this stage, we might not be at this level, but I want to be in a place where I have aspiration. And therefore, from a VAT point of view, if I'm not making a turnover of $500,000, then I need not be VAT registered in a 12-month period. All right, so let's live in hope, and let's live in a place where we always aspire to greater things. So the basic principle of VAT is that a tax should be charged at each stage of a production and distribution process, but that the total tax due should be borne by the ultimate consumer of the product. So what you see in this production chain, you have the producer, the manufacturer, the distributor, the retailer, and the consumer. At each stage, the VAT is charged. The person who has to pay the ultimate burden of the VAT is actually the consumer. At each stage, the producer, manufacturer, distributor will be collecting taxes on behalf of the government, going back and forth, and eventually it nets off. And then the last person who pays the burden of it will be the final consumer. Let me also indicate something to you. The question that was put to me, yes, having to pay VAT means be making serious dollars as a small business. Well, yeah, because you got to be 500,000 to pay the VAT. But to be registered for VAT purposes, as a small person, you're still paying VAT for things that you're buying, but you don't get it back because you're not VAT registered. You get VAT registration when you reach a certain threshold of earnings. So we need to live in hope, and hopefully we all will get there very soon. With regard to value-added tax is achieved through businesses who are registered for VAT. They're required to charge VAT on their output items, the items that they have sold. Such businesses are allowed to recover input VAT from the things that they have purchased. In effect, VAT-registered businesses suffer VAT on things that they purchase, and then they charge VAT on things that they sell. So ultimately, though, the total VAT is borne by the ultimate end user and customer. VAT, therefore, is administered by the Inland Revenue Division and the Customs and Excise Division of the BIR, so that they are able to collect VAT from those persons who are registered. You'll appreciate now that a lot of things are happening. We have certain VAT persons now getting their VAT refunds, and we'll talk about that in a little bit. So the VAT Act requires that persons who conduct business activity and who make commercial supplies with a gross earnings of more than $50,000 in $500,000 in a 12-month period should be registered for VAT purposes. The issue here is that the Board of Inland Revenue will want to see your bank statements, will want to see your business registration documents, will want to see your proof of ID, your proof of address, all those things before you get into this realm, and they want to see it on a consistent basis. They may want to see some contract that you have that says that you're making this kind of money. All right, so sometimes you have to first make the $500,000 and then go and prove to them that you've made it and can do it. All right, and it's 12.5% now on items. So if you pay VAT and you're not VAT registered, you have nothing to get back. All right, nothing to get back at all. So, of course, you need to file your VAT returns. So something like this is information that some of you need to know and be aware of. So just look at it in that light. For VAT purposes, it is unimportant whether or not the activity realizes a profit or not. It doesn't matter. Whatever you do, you still have to pay your VAT on it. Persons involved in carnival-related activities and other forms of entertainment they're also required to pay VAT. For costumes that you have and stuff like that, you have to do those kinds of things and pay VAT accordingly. When goods are being exported, VAT is calculated at a zero level. So it's still VAT, but it's at a zero rate. So there's no VAT on things exported. But if you're VAT registered and you're exporting, it is zero. If, on the other hand, you are locally operating and you VAT registered, and you meet the threshold, you should be taking off VAT or adding VAT to your costs as far as the consumer having to pay that. There's certain exempt services for VAT, and one of them would be employment. These people don't pay VAT for salaries and stuff. Private transactions refers to occasional sales of personal effects. So depending on what you're doing for personal effects, you don't pay VAT. If you're getting financial services, so some financial service transactions, again, do not attract VAT. Medical, dental, hospital, medical services do not attract VAT, and therefore you should not be paying VAT for those things. Bus transport and taxi services do not attract VAT. Accommodation in hotels, inns, and guest houses do not attract VAT, except that if you're in the hotel or guest house and you buy stuff at the bar, then you can find yourself paying VAT in the hotel. All right. Public and postal services, there's no VAT. Betting and gambling and lotteries, there's no VAT. Training and education and tuition, there's no VAT. Of course, real estate, brokerage and stuff, there's no VAT. So these are the things that are exempt and not liable for VAT purposes. Real estate brokerage is also not liable for VAT. Rental of residential property. Rental of residential property is not liable for VAT. And then we go on to how often VAT returns. VAT returns are every 2 months. You got to file your VAT returns every 2 months. So although you might not be registered now, and you're going to get there soon, be mindful that once you meet that threshold of $500,000, you must have in place proper systems and processes. Because here, every 2 months, you got to calculate what your VAT is and pay it by the 25th of the second month. So that I am VAT registered, I collect VAT in January, February, I have to pay that in March. And you got to pay that by the 25th day of the month following the end of the tax period. And the tax period is every 2 months. Tax period ends for the last day of January, March, May, July, September, November. Tax period ends on the last day. So that's category A. Category B, tax period ends on February, April, June, August, October, and December. So when you apply for your VAT registration, depending on when you apply, you fall into these categories A or B. And once you fall into these categories, then your VAT return periods will be accordingly in this particular week. So, but when you supply, when the goods are supplied within whatever period is supplied, will determine that VAT period. As a general rule, supply is deemed to have been taken place on the earliest of the following: the supply, the date of the invoice, and that's why sometimes having an invoice is important, because the date of the invoice will trigger when the VAT will be liable. The date of payment, in some instances, is based on the date of payment. So sometimes you have some people give a request for payment and say, okay, simply send me my payment. And when you make the payment, then they trigger the invoice and the VAT is now payable. The date of invoice or the date of payment. The date when the goods or services are made available. So sometimes you order and you haven't paid yet, but you order. The goods are sent to you. Once the goods are sent to you, the date on which the goods or services are made available to you, that's the date on which you're liable for that VAT, and therefore you need to be invoiced at that time. The whole VAT account or VAT administration arrangements are very simple. The VAT is charged on sales, which is called an output VAT. You minus your VAT on purchases, which is the input VAT. It's equal to VAT due or refunds or credited, or what's credited back to you. This account provides this is a summary of how the VAT transactions work. So effectively, VAT is just a pass-through the business of money owed to the Board of Inland Revenue. Effectively, VAT is just a pass-through of money owed to the Board of Inland Revenue. So you, as a VAT registered person, when you sell something, you have to collect taxes for the government, which is your VAT output. When you buy from persons, you are paying them what is due to the government. You will then minus what you pay from what you owe and pay the difference back to the government. It's a pass-through. But here what happens? Because we are heavily bent on cash flow, what tends to happen is that people collect the money and spend the money. And all of a sudden, when the VAT time comes to pay, they do not have the payment to be made. The advice is that at the end of every month, you should maintain probably perhaps 2 accounts. One account is your operating account, and the other one is an investment account. Transfer your VAT payments, net payment for the VAT purposes, into your investment account, so you can make some interest while you wait on the time to pay the government. And any time has come around after the 2 months and 25 days, you then pay them their money. You have made some interest on the money that you're holding for them, and you hope to get it back that way. The VAT account is really an in and out account. You can go through the details of it differently. This is where it will be reflected, but it's more shown in the context of the VAT form. It's a very simple form to fill out. And of course, you have to disclose your name, your business activities, and stuff like that. And then indicate what your output VAT is, what your sales would have been on the left side. On the right side, what your input is, what your VAT on commercial supplies would have been, what your VAT on imports would have been. When you minus those things, you get the net, and then you're able to pay over the VAT to the relevant parties. So it's a simple thing, you know. But you know what gets us messed up with it? As a business person, and I want you all to be conscious of this. Somebody comes and pay you. You're selling for $100, but they turn around and give you $112.50. That $12.50 is not your money, but it goes into your bank account. You have bills to pay. You write a check for this, you pay for your phone, you pay for this, you pay for that, and then all of a sudden you find you spend 105. But you didn't have 105, you know. What was yours was the 100, but you spend the 105, which was part of their money. And then when the time comes around for you to meet your payment of VAT, you don't have sufficient to pay to the Board of Inland Revenue. Also, too, many of us are Trinidadians, and you always hear them saying to you, well, here what now? Don't take a bill now. I'll pay. I'll take it off the thing now. Just pay. You don't have to pay back. And they think they're smart. You who might be VAT registered and not taking a bill lose the opportunity to recover your VAT. So if you're VAT registered, make sure you get VAT bills whereby your purchases can help reduce what you got to pay to the Board of Inland Revenue. For you who are not VAT registered, you'll be happy to get a bill or to be paying something that you're not paying VAT on. Not a problem. But here what happened to you? You have now to go and import some things, and the Board of Inland Revenue is asking you, where's your VAT, or what have you paid VAT on X or Y? Or you're being assessed, and how you didn't pay VAT on this? Where's the VAT invoice for this? And all of a sudden that person didn't give you an invoice. They didn't give an invoice with a VAT number on it, and you can track it back to the supplier who's didn't do what they're supposed to do. So yes, you pay less when you don't pay VAT, but as everything else in life, there are implications for what you do. When you don't feel or see the implications, you get away with it, but everything is only for a time, and we'll see how things go. I was reading, just as we had the break, I went back to the day's Guardian, and I remember when I started this morning, I said to you, based on the talk in the Senate, we are seeing where the senators are talking about stricter tax laws. And then when I turn 2 more pages down, I see where the minister responsible and the prime minister in the committee that's looking at the recovery of Trinidad and Tobago, they're looking at tightening the loopholes for these things, for VAT and taxes and stuff like that. So it's important that this course is timely, that you understand what needs to be done, and you put the right things in place. What are the powers of the Board of Inland Revenue? What are the powers of the Board of Inland Revenue? Any person who without lawful excuse refuses, any person who without lawful excuse refuses or neglects to attend or give evidence in pursuit of such a notice from the Board of Inland Revenue, answer any lawful questions touching on matters under consideration, or knowingly, willfully gives any false evidence under the section referred to, is guilty of an offense. The Board of Inland Revenue can mandate taxpayers to provide particular evidence and information on a tax return. Failure to comply within 14 days of a request to provide that information, the board may, and by not less than 14 days, give notice in writing to require any person to attend before it and give evidence with respect to his income and to produce all books and records. The books and records that you're supposed to keep for 6 years, plus 1/7, evidence to show what they need to find and what they need to investigate. And under his local control and such and proof of the income. So the law says that you need, once you have a legitimate request in writing from the Board of Inland Revenue to prove something with regard to your payments and your reductions, etc., you have a timeline in which to do it, and you're going to do it quickly. It's an offense, and what the offense means. You're liable on summary conviction to a fine of about $30,000. Right? Or imprisonment for 2 years or both. In addition to any penalty which the court may impose, it can order the immediate payment of any tax or any penalty imposed, or both such tax and such penalties, and the court may, at such order of imprisonment for imprisonment or default for any period not exceeding 2 years. So it's not that the laws don't have teeth, you know. It's just that they have not been pushing aggressively with it. And mind you, they will. And they will start, because if they have to tighten the systems will be tightened based on not the compliance work, but also on the penalties imposed by the laws. Failure to register. So you fail to register, you commit an offense if you fail to register for tax purposes. Upon summary conviction, a fine of $15,000 and imprisonment for 1 year would be applicable. So here's my view. And at the same time, you need to pay them what is theirs. So the old saying is, render unto Caesar what is Caesar, give unto God what is God, and the rest is yours. So don't be bothered about it. What you have now is the information in order to know how to manage the taxes, how to create expenses that are deductible and allowable, how to make sure that all your house expenses are taken into your business, where your business is part of your household. If it's downstairs or upstairs in a room, that you have expenses of that household that you can put into the business as legitimate, allowable business expenses. And once you do those things and the right things, then you're okay. So give Caesar what is his, give the taxman what is the taxman due, and give God what is his, and of course the rest is yours to do what you will. Some businessmen for VAT ordered to pay $66,000 in VAT. Directors plead guilty to tax charges because here what? They couldn't provide evidence. $1.2 million bail for a lawyer wife for cheating with public revenue. All these headlines were headlines in newspapers in Trinidad and Tobago. You might not have paid attention to it at the time, but all these are headlines. The laws are in place. The laws are in place for tax purposes. The penalties are in place. The rules are in place. They enforce when they need to, but as night follows day, people, more and more compliance to the regulations of tax will become present and center. The government of Trinidad and Tobago today is spending quite a lot of money on social support services to its population. Where the money coming from to pay that? They got to go to their taxes. Mr. Senator Robert Lee Hunt has indicated so in his newspaper article today. The senators are talking about it. I reminded you when I started this morning that what the senators were saying. Our aversion to taxes needs to change in appreciation of the collective benefit and better future. It's an important thing for us to consider the bigger picture. We are in a place whereby these things are going to become more serious and more demanding. You are self-employed people, and you ought to be in a place where you do certain things. I want to take the opportunity now just to break away from the slide a minute and to look at some things that are also important. So we dealt with the VAT, we dealt with the penalties for VAT. I want now to deal with some other things that are more interesting, more simple forms that some people have a bit of an aversion to paying meeting forms and paying forms. The form in front of you, is the payment form. Now, all these forms that I have here, I am going to email to Fashion TT, and Fashion TT will forward them on to you all. So you have them in your arsenal for information for what you need to do. When you have to pay the Board of Inland Revenue, don't just walk into the Board of Inland Revenue to check or cash and say, well, I want to pay this. Use this form to identify the date, the name of your business or yourself, the address of the business, the date you're making the payment, or you submit the payment to the Board of Inland Revenue, the type of taxes. So in here, it could be PAYE. It could be PAYE in here if you want. You have to identify the BR number or VAT number. Now, in PAYE, there are two things. There's either a PAYE number, or you can give the company's number. So if you give your BR number, you can give your PAYE number. The Board of Inland Revenue will find the appropriate number. So I can give my BR number, BR number in here, and the year in which I'm paying it, which could be 2020, of course. And of course, the period. So if it's the end of quarter, then I'm paying for the month of March, and I'm paying a principal sum, whatever that sum is. We try to avoid paying penalties, and we try to avoid paying interest. Paying penalties and interest is wasting money. So you put your cash amount or your check amount on the right, and you go to the Board of Inland Revenue counter with your check or cash and this voucher. They will give you a payment advice. That goes to the cashier. She will give you a payment receipt, and they give you this form. Make sure this form, what you put, the information you put on this form, is the same form translated to the receipt, and you're in good business and you're in a good space because the information there is correct, and you would know that. In our discussion, so that's a payment slip, and that's how you make your payment. We were talking earlier today with regard to the income tax form that exists out there. There are two types of forms. For those of you who have emolument income and emolument income only, this is the form that you have for emolument income. Simple form. You want some basic information: your name, first name, last name, address, mailing address, occupation, email address, and phone number. Your BR number, that of your spouse, your date of birth, your national insurance number, or driver's permit. You can give one, you don't necessarily have to give both. Your ID PIN number, these three, you could give just one, you don't have to give all of them, whether or not you're resident or non-resident. And the question was asked earlier, how do I know what taxes to pay? So here's how the tax is going to be paid. The first line here says, and I hope you're seeing it. Let me see if it's clever for you. It says, income from employment, government or non-government. Retirement or severance benefit or pension, where you get pension money within or without Trinidad. So you get a total emoluments. Less traveling expenses. That traveling expenses must be proven, must have bills, must have receipts for gas, etc. Of course, you get your net income. Then you have whenever you cancel your annuities and employer contribution for annuity pension plans and stuff, total income. Then you have what we call the allowable deductions. So within there, you have your personal allowances. So some of these might be tertiary education is there, first time acquisition is there, deed of covenant payment is there. That's what we spoke about. So that's your total net income. So minus all these from your net income. Line 9 minus these lines. Then you get your total net income. Take first your personal allowances, minus your personal allowances. So 72 minus whatever your net income is there. And then as we go on, you see what you have. So you said accessible income, approved pension plan. So you put whatever pension payments you made to the annuity, because the annuity will give you a statement. For those of you who contribute to Widows and Orphans Fund, and then of course you have the national insurance payment, which is limited to 70% of your national insurance contribution. This line must not be more than $50,000. So whatever you do in these three things, it can't go above $50,000. So whatever you actually paid is what it's actually going to be claiming, and not more than that. If you paid $50,000, you can claim $50,000. You didn't pay $50,000, only what you pay. So when you get to the next page now, and each of these pages will have a place to put your BR number. It's a very simple form. National insurance for domestic alimony, if you need to pay that, total deductions, minus the deductions, you get your chargeable income. Once I know my chargeable income, multiply by 25%, once the money is below $1 million. If it's above $1 million, then the first million is up to 25%, and the next above $1 million is 30%. From that is your tax on your chargeable income. So that's where you know what your tax is going to be. And then what happens to the Board of Inland Revenue, they give you tax credits and their instructions for that, double taxation relief adjustments, your positions for that. And therefore you come to what we know was your tax liability. After those deductions, what is your tax liability? And that's your tax liability. And from that, you look at these other things, and therefore you know what balance you have to pay. You know what your TD4 slip as an employee, what taxes you did pay, what it Board of Inland Revenue, and the difference between that and of course what you should have paid. You know whether or not you have a balance to get or balance that your refund, you're going to get a refund. And after that, you put your health surcharge numbers into it, how many months, how many weeks that you're paying health surcharge for, put the calculations in, and sign. It's a simple tax return for an individual who's an employee. But I said to you, for those of you who are sole trader businesses, it gets a bit more complicated. So let's go and look at that and see how complicated it gets. And don't let the form daunt you. Work through the form slowly, and you realize that the form explains to you exactly what needs to be done and how it needs to be done. Let's bring it up a bit bigger so you all can see it a bit clearly. So that in the form, therefore, is again the basic information. Right? The basic information that you had on the first page, which I told you about, so that your address, where you're located, your email address, contact information, the name of your business. What is the trade name? Down in the corner on your left, the trade name of your business. What is it? Self-employed persons only. What is your trade name? So remember the question that says, what about my subcontractors? If you're not a registered business, you're not putting your name here. So how come you're not a subcontractor? So you need to be careful of those subcontractor payments that you might be making, and let them give you an invoice, and let them also be registered, please, and keep a file on them to know that they have been registered. Of course, you'll indicate whether or not you're resident, non-resident, male, female, self-employed. Again, you have the VAT registration number, national insurance numbers. You put these numbers in as you need to. The board has it. So as a sole trader, working on a business, employed, the first form I showed you before was if I'm an employee alone. This form is where I am an employee, but I'm also in business. So you got to do the employee things as well. So the employee things are all listed here on the same form that we had before: government income, retirement, pension, total, your traveling, net income. So you have all, and the food annuity, everything else, and you have a total income. So this is the same as the form before. It starts to get complicated now because you have deductions, tertiary education, all those things are the same. Personal allowances, pension plans, whatever have you, national insurance, everything, and that's coming down the road. But we have to stop a minute and go all the way down. Because why? I want to start from the page 13, if you don't mind, because it might be better for you to understand. At page 13, let's go slowly now. We're dealing with the issues of business levy liability and computation, interest for short payments. So on this page, you're putting in by the month, January to March. Remember the quarter days we spoke about, April to June, July to September, October to December. Those were the quarter periods we spoke about that you have to make the payments. What was your income? What was the actual gross sales, receipts? And this is 2018, and we don't have yet published 2019 for January to December. And you put them in for each of the quarters. What is the business levy calculation? 0.6% of multiply this column by 0.6%. This is the answer for this column. So this is my total income here. This is my business levy. Is there any offset that I will have? No, you don't have any offset. Therefore, it's a business levy. Total here. And of course, you want to put you have to indicate the business levy paid, 90% computation. So you got to do this as a calculation to show whether or not you short paid or didn't short pay. You try to make sure that you pay what you're supposed to. The next page is a simple one too, where you deal with the computation for interest due on the payments of income tax on a quarterly basis. Remember, you're supposed to pay income on a quarterly basis along with the levies. So therefore, your chargeable income for last year, 2018 and 2019 is what they'll want to know. And therefore, you would have put in this space. If you didn't pay quarterly taxes, you would have addressed it here. What the Board of Inland Revenue tends to do, they ignore this because they go straight to the taxes that you pay. But ideally, in an ideal world, you're supposed to fill out this form in relation to your tax liabilities that you had before in order to calculate what your quarterly payments ought to have been. And then we get up to the balance sheet. And therefore, you're a sole trader. You should have an income and expenditure, and you ought to have a balance sheet. If you don't have a balance sheet, they will ignore it. They wouldn't fuss about it. But without a balance sheet, you may find yourself challenged in some way. So this is the balance sheet for your business, and this is your cash balances and stuff. The same balance sheet headings, what we call the statement of financial position. And of course, you have the assets and you have the liabilities, and you have to print that out for them. Based on that, you will see a schedule of income tax, business levy, health surcharge, quarterly installments paid. So this is what you actually did. And you have to indicate what the income tax quarter you paid, what business levy you paid, what health surcharge you paid. Remember that if you're working for somebody employed and you're paying health surcharge already, you don't have to come and pay it here. But if you're not working and you're just doing your own business, then you need to be paying health surcharge. Then you come to the next thing, will be a computation of your net income. So you have done your balance sheet income statement, and therefore you transcribe the income statement into this position where you have your gross receipts, your cost of sales equal your gross profit, your investment income, interest, rents, royalties and stuff. Other income is where you have a whole listing of expenses that are allowable. The accounting expenses, the advance payments, the advertising and promotion, all those expenses come on a schedule that you attach. We put the total in here. All right, so for whatever income you have for additional income. When you get the same thing down to expenses, you come to the deductions and you have the other one, other business expenses, and you have a total. So you go through all of them and you put your expenses all the way down. So this side is income, total income, whatever exempt income you have, total. Then you come all the deductions of expenses, entertainment, salaries, all these things that are allowable expenses will be taken into account. Other, here we are, bad debts, where you see the bad debts expenses, and later on the road you see the initial allowances and the wear and tear allowance, which will show you how to calculate that allowance in a little while. And that is your income and expenditure for your business on that same tax form. You go back to the 9th page of summary about allowances and balancing allowances. This will only come in when you fill out what's called the wear and tear allowance. So therefore, here's where you have the assets. The assets are classified in the schedule as A, B, C, D, and computers are classified as C. Furniture and fixtures are classified as B. Property and stuff like that, 10%. So you have each of them will have their headings, and you work out to get the calculation as to what your wear and tear charge will be for the current year. Of course, you have promotional expenses where you get some allowances. If you're promoting, indicated what of advertising for foreign markets, providing promotional literature and stuff like that. All those things are for things that for people in your businesses, you might be doing websites, you might be doing promotional stuff, and so that here's where you can gain some taxable benefits from claiming these things in your return. Payment made in respect of rents for the properties that you have. If you're paying for somebody overseas, whatever withholding taxes that you have paid. All right, this is for farming, so this is not your concern. Leave out what is not for you. Foreign income, not for you. Computation for net income, not for you for this purpose. Now, this is where I remember I was talking to you about losses. Remember I said to you that it's better if you didn't trade and got a zero income, you have losses. And therefore, what I would want you to do is to list a statement and file a return. In filing the return, you come to this position and you will look at a statement of losses that you will have. You have the statement of losses where you put what unrelieved, what you carry forward, and what losses you have for your trade or profession. So you have your rent or premiums, hotel, profession, vocation, business, whatever your gains or losses in that respect. Of course, capital gains is another part of it, but not for this purpose. And then from your income, you will create this statement in terms of income from other sources. And therefore, from the income that you have from your business, this is where your return now start to fit in and connect. We take the income from your business and start to place them in these relevant spaces here to come up with what you will work out as your chargeable income. Let me take you to one more space that's also important. Yes. So you still have your tax, your health surcharge calculations will come in here, and on this side, so if you do for employees and for yourself. Tax credits, if you get any, of course, well, for you, this might not exist, so I will bypass these. And you come right to the top where you're looking at computation for the determinants of benefits that are taxable if you have benefits in kind, tuition, education, and all those things that you're calculating, that you're putting in place. And then the final form, you bring those numbers into the statement to arrive at your taxable charges and income. And once that works out, you have your prepayments. So your taxes under your TD4 slip if you're an employed person. If you're not an employed person, you look at all your quarterly payments that you've been making, and then we work out what your TD4 deduction is. And then we say, okay, this is what you need to pay from your business income and from your personal income, all in one. If you're both employed person and a business person, all come together in this one statement, and you know they will work out for you what are your tax benefits that you will have. And therefore you sign and submit your tax return. If you are not trading, you get this form, put nil in all this in the spaces, and put zero, not nil, because they don't like you to put nil, put zero with a nil return, sign it and submit it. Simple. So that's the income tax form. For those of you who have changed your addresses or changed something about your business, then the Board of Inland Revenue need to update your information on the Board of Inland Revenue. Yep, you need to update that information. And in updating that information, you will submit this one to the Board of Inland Revenue with proof of changes. Now, we know right now we're going through some postal code issuance by the postal services. And therefore, you will get your new postal code. And therefore, you need to go into the Board of Inland Revenue and company registry and notify them of your change of postal address. And therefore, you go to the Board of Inland Revenue with this form, information update form, and update the information. What is your new address? What is the prior address? What's the new mailing address? What's the old mailing address? If you're a director of a business, that has changed, your phone number has changed, or the contact information, and you sign and submit this with the relevant supporting documents, so that your information at the Board of Inland Revenue will be constantly updated and indeed correct. All right. For those of you who might be tendering for stuff, who will want to know, who will want to submit and show at some point in time that they are clear of taxes, if you do what you're supposed to do, file what you're supposed to file, pay what you're supposed to pay, you can go to the Board of Inland Revenue and get a certificate of clearance. Application for certificate of clearance is a simple form, no big set of data, name, address, occupation, business, your business name if you have a business name, when did the business started, if you're an employed person, what's the employed person's position, if a tender that you're going up for, what's the date of the tender. You answer the questions regard to, did you file your income tax or corporation tax, yes or no? And if you didn't, why? That's a hard question sometimes. Did you pay all the quarterly installments? Corporation tax, self-employed persons, and others, and receipt of non-monument income, did you do that? Did you pay your health surcharge? Yes. Unemployment levy and stuff like that. Sign. And if you take this form and you go to the Board of Inland Revenue, they will then give you what is called a tax clearance certificate to indicate that you are not liable for tax purposes. There might be a small fee attached, I believe, for $100 for either one of these. The VAT is also there too. There's also a VAT clearance form. That too is very simple to do. It's a simple form to fill out. Don't, we tend to have what we call a mind block because of all these things that all the forms and things to be filled out. Just go through them slowly and you'll find yourself in a very, very good place. In a very, very good place. Of course, for those of you who are not VAT registered yet, if you're an individual and a sole trader, then there's a form that you fill out. This is the form, name, address, the mother's maiden name. This is exactly the form that you have to fill out to get your BIR number, and that's all the form is. All you need to put with this is your proof of ID, proof of address, and go and get your BIR form. If you have a business registration certificate, you go with that, along with that, and that's where you get your sole trader and you get your personal number that you could use for your sole trader business. If you're a limited liability company, then the form is a bit more detailed and requires that Yes, you have the address, the legal address of the business, what is the name that it's trading on, the business address, mailing address, etc. And of course, whether or not what's your registered information in terms of when you started the business, when was the business registered, do you have a website, how many employees did you have, and when did you actually start the business? That's what they're asking you here. Right? But then it comes, what is your financial year? So normally a 12-month period. And here's where you know whether or not you're going to get the VAT or not. This is the whole form that they still give you, but really it's not $500,000, you've got to prove it. If when you apply for your BR number, you only apply for a BR number, then when you want to get the PAY number, you have to go back and fill out the same form. When you have to go and do the VAT, you have to fill out the same form. So this form has to be filled out. If you're going for BR number at the beginning, you're going for all the 3 numbers, you got to fill the form out. And if you're going for the numbers after a period of time, you still have to come back and fill out the same form every time you're going to get the registration number. Each of the directors will have to give their information, and the directors will need to make sure that they are up to date, because sometimes the Board of Inland Revenue may flag you, and they will want the directors to be up to date. Let me get to some questions here, because I think some questions are passing. You asked a question here just to clarify. If someone is working for a company and that company is paying their employee taxes, including health surcharge, and that same individual has a registered sole trader business that is trading, do they have to pay health surcharge? No, they do not have to pay health surcharge. So long as they're employed by an employer who is paying their health surcharge, the health surcharge is paid. It's okay for the sole trader business. No, well, not for the sole trader business, really for the individual in question. Or it's just covered by the company, it is covered by the company. You're not supposed, you ought not to be paying health surcharge twice. Please do not pay your health surcharge twice. You don't need to pay it once. If the employer is paying it, you don't have to pay it in your business. If you don't have an employer, then you need to be paying it. So the question is, wait, so you have to physically pay it quarterly, but you are only filing it once a year? Let's not be confused. The quarterly payments are things like green fund levy, business levy, and health surcharge. You can pay them on an installment basis, on a quarterly basis. In the case of health surcharge, you can decide to pay upfront $429 because it's a fixed figure. Once your income crosses a certain level, you can pay it for the entire year and don't let it bother you, and you have to be going back and forth. But for the other quarterly payments, you need to be paying based on your income that you have earned in the quarters ending March 31st, June 30th, September 30th, and December 31st. Green fund levy is multiplied by 0.003. The answer is yes. Would they issue tax clearance certificates if you did not file the returns? Or is that grounds for not getting one? And the answer to that is yes. If you do not file your tax returns, they're not going to give you a clearance certificate. You can't even negotiate to get it. All right, they're very hard with that. In fact, what they sometimes do with you to say to you is, file, okay, for example, you registered your business 3 years ago, but you didn't do anything, you didn't trade. You come now and you want to get the tax clearance because a tender is out there. You come out to go and get your business registered. The Board of Inland Revenue will want you to do a letter saying why you didn't trade, all right, that you weren't trading. In addition, they want you to file the nil returns for the period in question. And then they will give you the tax return because they want to make sure that those periods are cleared. So the advice to you would be, if you're not trading and your business registered and you have a BR number, then file nil returns for me, please, so that the nil returns will be accounted for in the Board of Inland Revenue and you're good to go. If you were registered and you're not trading, then every year, please file the nil returns. The most important things to do. All right. So those are the forms. All these forms will be provided to you in an email so that you have them and you can access them for your purposes. If you are looking for these forms, then go to the Board of Inland Revenue's website, forms, and all these forms can be found on the Board of Inland Revenue's website. Be mindful that the Board of Inland Revenue now is going to really digital, and therefore some of these forms can be filed online, some of these forms can be downloaded and be obtained. I have a question before me. A business BIR number would be the same for different, would be the same or different your personal email, right? The question is your BIR number different? Your BIR number as a sole trader and a partnership is the same number. So if you go as an individual or you go as a sole trader business, you're getting the same number as your number, right? It's a number for you if you're a sole trader. If you're a partnership, then if you're a partnership, the partnership has to apply for a number for the partnership, and each of the sole traders, each of the partners will have their own personal number. That's where the difference comes in. If you're a partnership, the partnership arrangement has to have its own number, and the two partners will have their own individual numbers for the business. Bear that in mind. I want to repeat that. Your personal BIR number, if you're a sole trader, is your BIR number for your sole trader business. If you're a partnership, then you have to get a partnership BIR number and apply for that. But then the partners will have their own BIR numbers. The next question I'm seeing here, if you're making a health surcharge payment, which form do you enter the info to submit the payment? Well, I go back to the form I sent you here, and this is the payment form that you should fill in. All that you're doing here is saying health surcharge. You put whatever number your BIR number is, the year you're paying it, the month in question, and the amount of money. Cash or check, sign. Work with your check or your cash. Work with this voucher to the counter, the Board of Inland Revenue Office. They will give you a payment receipt that you go to the cashier with and give you back this form. And the cashier will give you the payment receipt for collecting your money. That receipt should match with this, and you keep that as your permanent record. Thank you very much. I know you showed us some forms. Please bring it up again. Well, I just did. No problem. All right. And that will be with that. So that's the forms. Those forms are available on the Board of Inland Revenue's website. And of course, I will send them to Fashion T to send them on to you. So you have it for your permanent record to do what you need to do. So what's the point we're making? What's the point we're trying to do? We have done a lot today. We have done quite a lot. And mindful where the country is and mindful what is happening, I am advising you all that the tax office is going to get serious. We're going to get something called the Trinidad and Tobago Revenue Authority. And once you see that revenue authority is in place, make sure you have your records in place and you have your information in place. When making a health surcharge payment, the company needs to have registered for PAYE numbers, or can they just have only registered for BIR number? I want to be very clear about something. And you use the word company, so you have to be careful what you are asking. If it is a limited liability company, then the limited liability company will have their own BIR registration number. They will have to apply for a PAYE file number, so they have a BIR number, a PAYE number, and it's under those numbers that they'll make the health surcharge payment. If it is a sole trader, then the number that is your BIR number as a sole trader, which is your personal number, and you're not working for anybody, that's the number you're going to pay it under. All right. If the partnership that already has a BIR number is then made into a limited company, does the BIR number have to be changed? The answer is yes. Very much so. If anything changes, the BIR number needs to be changed. Now remember something. A partnership is separate and apart from limited liability. So you got to go now with the limited liability and file for a new number for the limited liability company, and then go and close the partnership account with the Board of Inland Revenue. Do not leave the account open. What people tend to do, oh, I'm not trading in this business no more, I'm not dealing with this no more, and forget it. Don't do that. If you're closing down a partnership or you're closing down a sole trader and going to a limited liability, then communicate with the Board of Inland Revenue. You would have had to go to company's registry. In the case of a sole trader, file the Form 9 and close down the business. You'd have gone to the company registry and do a letter to the company registry saying that this company is no longer trading and pay the $40. Those registered documents showing that the company is closed must now go to the Board of Inland Revenue with an amendment form and register and be filed with the Board of Inland Revenue so they can close your company. Do not leave it. Don't forget that, well, they don't have no work. Forget about that. We ain't trading anymore. Close it down because you don't want to attract any untoward stuff in terms of payments and requirements to be dealt with. When making a health surcharge payment, right? Good. The next question, right, that's dealt with. Question: when you file the returns, how to interpret what you have received back from the Inland Revenue? Very good question. Because the Inland Revenue will give you a statement of their calculations. So you file your tax return, and then somewhere down the road, you see you get a refund check or you get something. Just before you get a refund check or just after you get a refund check, they will send you a statement of assessment. And it's in that statement of assessment that you will go back and see whether or not they agreed with your assessment of your income and that the calculations is what they deem the calculations to be. So you get that assessment and you'll see whether or not you have a refund to get or you have a payment to make. And that's how they will see it. So they will send it to you and you'll be able to determine based on the calculations where you made a mistake or what your problems are going to be. And they will tell you what that is. All right. So that be mindful of these things. So that folks, we spent some good time explaining to you the tax and tax implications for your business. I have another question which is interesting. Salaries. Questions about salaries. I've been hearing about some companies' unique response to current working. Well, I think that's being repeated. Yeah, that's a repeated question. Because we answered this question before. Yeah, we answered this question before. If employees, employers today, because of the forced measure, whereby because of the circumstances, the employer has no control over it, they can send you home because they have no money, they can't pay you. So they have to send you home. Then the government says that you should go home. And it's not because of their fault. So that, yes, they can send you home. They don't have, the employer does not have to meet the statutory payments because you're not being paid any money. All right. And therefore you may want to access the government grants and stuff like that. So we answered that question before. Good. You said you pay income tax once per year. Well, true, that's nice of you. But as a sole trader, I have to calculate my earnings quarterly. What I want to know is, do I have to fill that form you showed us every 3 months and pay income tax, or just calculate each 3-month period? You should, when you're paying the Board of Inland Revenue, you'd have to have, it's about vouchers and receipts and evidence of payment. When you're going to pay the Board of Inland Revenue any money, that form I just showed you, fill it out and walk with that form along with your money. The person at the front desk will take that form and the information on that form and then prepare what is called a payment advice. You take the payment advice to the cashier, and the cashier will then give you a payment receipt based on the information on the form that you fill out and brought to them to hand to them. So you need to do that. Income tax and quarterly payments must be made on a quarterly basis. You can pay income tax on a quarterly basis if you choose. Some people tend to want to wait till the end of the year to make sure that they pay the right amount and only the right amount. You can do that too. The law says that you should pay it on a quarterly basis or pay some installment of a tax so that when you come to the end of the year, you don't find yourself having to scramble. My advice to you is, if you know your business, if you see you run a year of your business, you know that you are profitable and to the extent of your profitability. What you don't want to find yourself is that you're making $300,000 and you have to pay significant amount of taxes and find that cash right away. So you pay a little bit over a period of time, so that when the time for payment does come, I can add up what I've paid before, and I might not have to pay as much. You got to manage that. You got to manage that cleverly, in the extent that you don't want to give the government too much that you have to get a tax refund and wait for it. So don't do that. But you can pay a little bit if you think you're exposed in that way. For people of a small sole trader, they're probably making under $100,000 or $200,000, $300,000. I wouldn't bother with it. I will pay them at the end of the year when I do all my calculations and gather up all my expenses and make sure my business looks pretty good and I don't pay much taxes. So we could look at it that way. Hi, I don't get to say the number to call you, or can you give me? Okay, well, the issue is at the back of the slide, I will send you a number, and in the slide, I will send you a number. And for those who wish to speak to me, it's on the slides that will come to you. That's my, and then my email address is, and you can email to me if you wish, and I will try to answer your questions. All right, I'll try to answer as best as I can. There's my email address on the chat, and here's my telephone number. It's also on the slides. Not sure if you missed my response, so I am asking again. Well, feel free. Is this recorded? Yes, it's being recorded, and I think it's going to be sent to you. The slides are also going to be sent to you, and the ones from before. Well, I must apologize to Fashion TT. They got the slides for last week pretty late, so I think they will get that to you all shortly to them. So yes, for the first week that's been sent. The second week has been sent or be sent late, and this one will get to them. I just want to tidy up some of the issues on these slides, probably Monday, Tuesday, and get it to you so that you're able to have it as for your records to do what you have to do. So they will be sent to you. Yes. Today we started by trying to look at this whole thing of income tax and corporation tax. And it is heavily dependent on the type of business you would in. Individuals pay income tax, sole traders pay income tax, partnership pay income tax, limited liability companies pay corporation tax. So many of you are sole traders, you pay income tax. Your BR number for you is the same number of your business. Please ensure that your business is registered. It's a simple process to do. All right. Corporation tax, if you have anyone of you there, if any one of you listening to today is limited liability, please allow me a latitude to say something to you directly. There's a law out in terms of Act number 7 and number 6 with regard to nonprofit organizations of 2019 that limited liability companies need to declare their beneficial ownership to the company's registrar. Please do so because there are significant penalties for failing to file your beneficial ownership. Act number 7 and Act number 6 for nonprofit organizations. Please look at that and make sure that is done also. So you have the income tax, you have the corporation tax, and you need to appreciate that and how you deal with these things. So there's, be mindful of your quarterly payments, be mindful of your processes. For those of you who are not yet registered, please get yourself registered. When you're registered and you're not trading, please remember to file nil returns so that they don't have to come and ask you anything. And when you want a clearance certificate, returns already been filed. Keep copies. Everything you do with the Board of Inland Revenue, keep a copy. Somebody said in an earlier question, the attitude of the people that work there. I'm not going to deal with that. What I'm saying to you is, with these government organizations, your evidence is your evidence. They challenge you to say, well, prove. You have evidence to prove. Please keep copies of everything that you're doing with the government agencies, the tax office. Keep a file on the tax office so that you go back into a file and be able to show all your payments, etc., that you have. Separate your payments from your correspondence to me, please, so that you know exactly what you're dealing with. Your BR number is the same as your sole trader. A partnership requires a partnership BR number, so that has to be applied for. And that each of the partners must have their own BR personal numbers. A corporation must have its own BR number. Any changes with regard to your address, with regard to your name, with regard to the way you're doing the business, you need to make that amendment to the Board of Inland Revenue. If you move your sole trader to limited liability, you move your partnership to limited liability, then the limited liability has to apply separately for its own number, but make sure that you go back and close the partnership number. You can't close your personal BR number. Don't do that because you need that for your personal, but you can close the partnership number because the partnership should no longer exist. Okay. The whole thing hinges on proper record keeping. It hinges on proper record keeping. So please, it is important that you buy the binders, buy the voucher books, write up the vouchers, table them to the receipts, put them in a binder by month. You don't have to open a file for every month. Buy one single binder and put the thing in there. Categorize the binder. You may have your invoices or invoice summaries. You may have your bank statements. You may have your bills and invoices. So you're good to go. All right. And of course, well, once we reach the threshold of value-added tax, I think we're in a good place. You're about a $500,000 turnover. Then you'll give the Board of Inland Revenue the relevant documentations for registration. But if you're registered for VAT, you give them your VAT you give your registration certificate for your companies or businesses. You give your proof of address. You give your ID cards and stuff. You give proof of your bank statements have to be there to show that you're making the $500,000 turnover. All those things have to be in place before they'll give you that VAT registration. Once you get the VAT registration, don't spend the people VAT money for me, please. I would have opened what I call a deposit account where I could get interest on money that I have. And at the end of every month, transfer what the VAT money is. So when the VAT payment is due, and you have the cash in your account, you pay them. If you don't have the cash, you bring the money back from your deposit account and pay them. But you'll have earned some income from having that money secured. All right. Went on to Caesar, what is Caesar's? Give God what is his, and then the rest can be for you. At this point in time, are there any questions or comments? Are there any questions with regard to what has been said? Are you clear regarding what you have to do as a sole trader, in a partnership or corporation? Put in place the registration of the businesses, get the tax numbers done and know how to do it. The forms are there for you to get these things done, and just simple processes to do. If you do it yourself, it will save you money. You get some professional to do it. You pay them to do it. All right, if you pay them to do it, you get done for you professionally. What I don't want you all to be doing is you need to make sure that you put in place a system of accountability for your business, for filing of report of information and record keeping, so that any information you want, you can get easily, and it makes it easy for people who are working for you to get the work done for you. Just to confirm, as a question, you only need to pay the health surcharge, NIS, etc. when we pay salaries. So if payment is sporadic due to cash flow, we only pay. Well, yes, that's the point. If you have people coming on part-time, or you have people coming on seasonally, only when you come on and you're paying them is when you're making deductions for payments for making statutory payments, for making health surcharge payments and national insurance payments. So when they come on and you have them on and they no longer they work, you pay them, and then you pay national insurance in the following month. If they're not working, then you don't need to pay them because we have nobody working. But here's the most important thing. The national insurance record will show that you didn't pay for that particular month. It might didn't show for 2 months. You need to have a file of your salaries for these employees, where you have your pay sheet. So if I have the pay sheet for November, and I have people on the pay sheet for November because I brought them on, they work for December, and I have them with the pay sheet. But January, I send them home, and they're not working for January, and they're not working until probably Carnival, February. Then put a piece of paper in your payroll that says, for the month of January, not employed, no employees, so that you remember what happened then, so that when they come to check you, you can indicate, I had no employees that month, and therefore I have no payments to make. You start back paying, go and pay. The fact that you have what I call up and down payments, it may be a cause for them to flag you, to come and check you, and therefore you may want to have the evidence to show that I had employees and I paid them. Look, the payroll, I didn't have employees, I didn't pay them. As a sole trader, you don't pay national insurance, so they can't ask you for national insurance for yourself. As a sole trader, you have to pay health surcharge if you're not employed otherwise, so they can ask you for your health surcharge for yourself, but they cannot ask you for PAYE deduction because you, as a sole trader, you do not pay PAYE as an getting a salary from your business. Okay, let's confirm, right? Fine. Well, Mr. Rush, thank you very much for your comments. I appreciate that very much. I didn't hear you say anything about annual returns. So traders, well, the reason why I didn't talk about annual returns is because an annual return is something a company does for the company registrar and not for the tax office. You have the tax return for the Board of Inland Revenue, and this is a tax program, so I would have spoken to you about the tax returns. So traders don't have to file annual returns, so traders don't have to do anything once the sole trader business is registered. They've got about their business. The only thing that they have to do is to, when they make a change of address or anything of the nature of the business, they need to go back into the company's registry and make an amendment and file an amendment with the company's registry. And they will take a copy of that and file it with the Board of Inland Revenue. Sometimes people file with the board of, with the company's registry and don't file with the board of inland revenue. You need to do both of them if you don't mind, for both, in both cases. Comment. Very comprehensive and lots of food for thought and action. Okay, that's a brief. Action is important. Small businesses really need this kind of simplified advice and instructions. Well, and he's saying to you all blessings to you, and all the best of luck to you in the work that you're doing and your businesses. Well, I'm going to say the same. All the best of luck to you in your businesses. I trust that you had a very interesting day and your time was well spent. I trust that you have learned something. And even if you learn something, you get the slides, you get the handouts, keep them, look at them. You could give me a call. Could you clarify something for me? I could do that for you. It's not a problem. And make sure that you put the right records in place and the right systems in place for your business, please. It's very important as you go to business. The company registry is also an issue. The taxman is an issue. And the next issue you're all going to find coming up is how we relate to your bankers and how you treat with your bankers. And the bankers are going to be asking you all for your tax clearance. So we have something in mind. Some of you will want to go, but you take your businesses and you have your income and expenditure statements or your cash flow, and you want to go to the bank and get a loan. It's important that you can walk with when you walk into the bank, you walk with a tax clearance certificate, because the banks are now looking for tax clearance certificates when they're giving loans. So please be mindful of that too. Okay. Thank you so much. Thank you all. I'm getting some very nice comments. Absolutely, this was an amazing presentation. Definitely reached out to you. Thank you very much. I trust that you enjoyed this segment on the work that you're doing. There are 3 modules done here in terms of record keeping and cash management, pricing and costing, and this taxation. All 3 are very important for your businesses. Please pay attention to them. As you grow your business, you can only grow your business if you keep looking at the numbers and managing it well and efficiently. So good luck to all of you. And I want to thank you very much and thank Fashion TT for allowing me the opportunity to do this presentation. So Lisa, let me pass over to you now.
Hi, good afternoon. This is Amanda Williams here. Lisa asked me to stand in just for a little while. So thank you very much, Mr. Winwood. This has been a truly invaluable session, and 3 sessions thus far. We've been with you. You've captured a lot of everything that we wanted to hear about taxation. Thank you for answering all of the questions. Just to say to the participants, if we have missed any of your questions, you can email us directly at info@fashiontt.co.tt, and we will send to Mr. Winwood. But he has also included his information there, and you will get the slides from us. So we want to thank you again for participating in this session today. All the best for the weekend, and stay safe, everyone. We are looking forward to your participation next week, Saturday, and also for our upcoming webinars during the week, our other sessions, which will be on Tuesday coming, Cutting It. Thank you, everyone, and stay safe. Bye-bye.
Thank you. Bye-bye.